Hello everyone and welcome back to the Velocity channel where this is your bridge to financial freedom. I want to go ahead and dedicate this video to Rachel, and I mispronounced your name on purpose, who brought up a really interesting question. And you've always seen this type of scenario in my videos, right? Where the income is $5,000, right? And then the outgo or the expenses is $2,000 or maybe it's $3,000, whatever the case is, right? And then we have your cash flow. But today I wanted to do something a little bit different, and I wanted to show you what you're supposed to be looking at when you implement the velocity banking method, because we were always taught, hey, what are you bringing in? How much are your expenses? We were never taught the power of cash flow, and that's where I want to focus right now. Okay. Before we do that, go ahead and like, share, and subscribe so that everyone that you know can know about the velocity banking method. All right. Are you ready? Let's go. All right, guys, I get it. Not everyone's income is going to be $5,000 coming in. Not everyone's outgo is the same. Okay. But we do know this, that if your income is $2,400 and your expenses are $2,400, we do know this, that your cash flow is going to be $0. All right. So my question is, what do you do when velocity banking is faced with this situation? Can we still help? Well, chances are you don't know that you actually have hundreds of dollars of cash flow within your very own enterprise, within your very own line of credit, for instance, okay? And this is just the one example of the power of velocity banking and how it can work for you. Can I go ahead and can I break that down for you right now, okay? Because we already showed you your income, $2,400. I have to repeat this, just so you know, I'm not pulling any tricks, all right? Income is $2,400. Your expenses is $2,400. $2,400 minus $2,400 is $0. Check your calculator. All right. Now, let me show you where that hidden capital lies. Okay, let's do it. All right. So just as a refresher, the I stands for income, the E stands for expenses, and the C stands for cash flow. All right. Which means I minus E equals C. All right. $2,400 is your income. $2,400 is your outgo, and $0, right, is your cash flow. Most likely you've got a credit card, right? Or 3 or 4 or 5. Okay. Remember, the recommended limit or the maximum is 5 credit cards, right? Let's just say you got $5,000 limit on there, and that's your balance. Okay. Your minimum monthly payment, let's just say $200 each month. Now, this $200 each month, and this is powerful. This is going to be very powerful. Please listen. This $200 is factored into those expenses. Now, a lot of you already know where I'm going with this. But does it always have to be this way? Does it always have to be what we were taught? Go ahead and pay everything from your checking account and never from your line of credit? Is that the way that we're going to Velocity Bank? I want to show you a new way to bank, all right? And that is going to put this minimum monthly payment back into your wallet. Would you like to see that? Okay, let's see it right now. Now, before I explain this to you, I want you to know that I just took $2,000 and added $400 onto it. Remember the 5,000 minus 2,000 example? Okay. I added $400 to it, and I did that on purpose. Okay. I want you to know that it's not about the income and the expenses so much as it is the cash flow. Because with the cash flow, that's what we're going to be paying down the line of credit with. And that's why I disagree that lines of credit are solely debts. I don't think so. I think they can be our most powerful tool against debt, against consumer debt that we've ever seen. Okay? And I'm going to show you why. Watch this. Now, how did I come to this conclusion? Did I just move numbers around? Let me show you where I'm allocating my income, right? This income that's coming in is actually going to this credit card. So this credit card no longer has the balance of $5,000. It has the balance of $2,600, all right? $2,600 is the new balance. Why? because I put the income inside of the line of credit. Now, when I put this much income inside a line of credit that is calling for $200 each month, do I have to give them a minimum payment? Didn't I already pay them? Listen, folks, I already paid them, even though we call it, as Velocity Bankers, a transfer. We're transferring from the old checking account to the new checking account. So you don't have to worry about this. So where does this minimum monthly payment go? Into your wallet. Now I already showed you how to pay off close to $500,000 with $53.17 of discretionary income. We already showed you that. $53.17 of discretionary income, or cash flow. You're paying off close to $500,000 in, 11.9 years? I'm talking about the house, right? Another house, right? 2 houses, auto loan, car loan, signature loan, right? MasterCard. We're paying them all off in 11.9 years. With $53.17, what can we do with $200 in discretionary income, in cash flow? That's why you shouldn't be afraid to utilize, right, what they've given you. You did earn it, right? Some of you have unsecured credit cards. Even if you have a secured credit card, even if you have a credit card, hey, maybe your credit is a little riskier than most, and you have to pay an annual fee, right? It's still worth it in order to get this cash flow into your financial system. That's what it's all about. Okay, so income and expenses and cash flow. The priority here is cash flow, because that's what's going to pay down this credit card. That's what's paying it down. The $200 each month, paying it down. And don't forget, right? What are you doing? Oh, this is powerful. What are you doing with your income? You're placing it inside of your new line of credit. All right, folks, I just want you to know, the more cash flow you have, the faster you can pay off those expenses. All right, now you don't have to write a separate check to the credit card company. Remember, that's yours, and that's what's paying it down. All right, now as you get elevated in your income or have less expenses, guess what's paying the card down? That cash flow. All right, so folks, I just want you to know that this is not just for those that make 10 grand a month, right? Listen, this is for everybody. Why? Because you're going to be continually focusing on the cash flow. And if you need help with that, please let us know. Man, we've helped, my goodness, I don't know, thousands of people, okay, to implement this in their lives. I remember Patrick, shout out to Patrick. Thank you so much, man. That was an awesome comment. He actually said, listen, man, it's because of you that I got into however much it was, I forget the number, but it was 6 figures amount of house, right? That's what it's all about, folks. What is your dream? Let us help you accomplish that. Listen, don't argue with me. You got to argue with the numbers, all right? The numbers are here to let you know, hey, chunking the principal, right, is where it's at, and leaving that cash flow in your line of credit is how you pay off that line, how you pay off that credit card. All right, do you need more cash flow? Who doesn't need more cash flow? All right, who doesn't? Who doesn't desire more? And of course, we're going to show you even deeper than this. And there's a method, there's a tool you can use that's even better than this. Let us know if you need some more help with that, and we would be glad to help you out. God bless you. And you guys like, share, and subscribe so everyone can know about this method. You take care.